from its all-time high here to where it's at right now, down 35%. Dadgum. Yeah, I mean, a full third of Nvidia's market cap wiped out in the span of 31 days. More selling. Economists urge the Fed to take this unprecedented step. Hey, Peter, glad you're here. Michael, good to see you. David, good afternoon. So last week, the Fed didn't cut rates. They held rates steady. And wasn't a surprise in my opinion, or really anyone's opinion. My surprise is the fact of this really strong reaction, this incredibly strong, huge reaction down, right? From all-time highs to down nearly 10% in the span of 14 trading days. 14 days. That's all it took to go down 10 percentage points. And I'm looking at the board over here and I'm like, some of these are getting absolutely demolished. Like Nvidia's down 7% today from its all-time high here to where it's at right now, down 35%. Dadgum. Yeah, I mean, a full third of Nvidia's market cap wiped out in the span of 31 days, right? That is absolutely, absolutely crazy. And I mean, we're looking at the watch list over here, 159 on the bear list versus 13 on the bull list. As you can imagine, more and more and more and more stocks are showing to be basically for sale, if you want to think about it, right? All these stocks on sale. But this shouldn't come as a surprise to anybody who's watching us. And I really encourage, if you aren't already subscribed, to please do so, because we go over this every single day and we talk about how we completely sidestepped this down move, completely sidestepped it. And I'll talk in a minute about a discussion that was on the Discord. And it's not that I'm a fortune teller. It's not that I'm trying to predict tops and bottoms. It's the fact that we had the data. The data said, you're running out of buyers. And then the market sells off, right? Just looking at the data keeps you from being in situations like this. The VIX, the volatility index, the fear index, if you want to call it that, hit the highest level since COVID, the highest level since April of 2020 on the VIX. And we're down not even 10% at this point. That tells me that a lot of people are really scared, really scared. In fact, what I predict, I'll give you some predictions. We're coming into 1, 2, 3 order blocks stacked in this area right here. Let me remove this. 3 order blocks stacked in this area right here. What I think is about to happen is we're going to have a monster move back up. I mean, it's going to be a face-ripping rally, a 5% rally in the next couple days, may give or take. But I think we're about to hit a tremendous rally. That's a new word. A monkey hammer type of up rally. Tremendous rally. And then the bottom's going to fall out. That's Chris's prediction. Now, where do I get that from? Couple things. First, we're stacking order blocks right here. And whenever you stack order blocks, those are open orders waiting to get filled. We're right at that area. So even if we come down into that a little bit, there's so much support that's going to pop it back up. Second, I'm already getting the texts, and you probably are too. Did you see the markets crashing? I'm already getting those texts. I got one this morning from one of my friends. He's like, bro, the market's a bloodbath this morning. Anytime you see that, that's retail telling you you're hitting a short-term bottom, right? It's going to bounce. And then you're going to see all over the internets, especially on the social medias, all these people talking about how they bought at the very bottom. I'm telling you, watch, just watch. All these people are going to be saying how they bought at the very bottom. It's going to come up, it's going to turn around, and it's going to wipe out so many people who thought they were geniuses buying this dip. Just wait and see. Now, I could be 100% wrong. As my publicist told me the first time I was on TV, Chris, you can give your opinion. You could be right, you could be wrong. Anybody's going to forget by the end of the week. But if I'm right, I'm going to make sure I tell you all about it. But this is what I'm seeing right here. So let's take a look at the news here.
114,000 jobs in July. The unemployment rate jumped to 4.3%. Steve Moore joins us now. All right, Steve, are we headed towards a recession?
Well, speaking of hurricane forces, you know, what's happening in the market right now is certainly unsettling to everyone. By the way, I remember, I don't know if you do, Stuart, the 1987 famous sell-off where we had a, and that was one of those things which just, it turned out to just be a blip where, about a month later, we were right back on our merry way to higher returns. I don't know if this is the start of something really deep like a recession or whether this is one of those blips, but I'll make a couple comments on
And that's what I had told my friend by text message. Is I was like, listen, short term, I think we're about to see a huge bounce, like a face ripping rally bounce. After that, a real strong pullback, maybe to this level, maybe beyond, right? Maybe to under 500, maybe. Longer term, I have no idea. Because he's like, oh, it should recover by the fall, right? And I'm like, I don't know. I mean, how would I know that? I'm just telling you what I see on the charts right here. David asks, point wise, how far away is that order block? At the moment, we're at 515. Order blocks start at 510 and go all the way down to 490. And then the next one starts here around 458. So we're not far off. I mean, I could see it gapping down in the morning and then rocket ships later.
On it. One is, it is interesting to me, and I'm not saying this is statistically significant, that as Trump has dropped in the polls, as he has over the last 10 days because of this kind of Kamala phenomenon, the market has reacted in a negative way. Why? Because Kamala Harris is really bad for investment. This is a woman who wants to double the capital gains tax and tax on realized capital gains and those kinds of things. The other thing that I would say is, you were asking earlier, should the Fed meet now to cut rates? And I say yes, I think they should. I think if you're looking I like to look at commodity prices as you do, Stuart. Commodity prices are falling very rapidly right now. We've moved from a problem of inflation right now to deflation in prices, and I think the Fed has to act to stop that.
So, okay, this is what they wanted, though. Let's not get ahead of ourselves. Yes, we went from inflation. We've not seen deflation. Dude's not even close to seeing deflation. We are at disinflation. Disinflation meaning the rate of inflation has slowed, right? It was 9%, now it's 3%. Doesn't mean prices are coming down. It still means prices are going up at 3% instead of 9% per year. We're not at deflationary points yet. Once we reach deflationary points, two things could happen. One, we could establish a new normal, which would be great. Maybe going back to pre-COVID levels, maybe with prices, right? Two, which is more likely, and I say more likely because people are so fed up that this seems to be the course of how things have gone, right? One extreme to the other. We can't be anywhere in between. Kind of like people's politics lately. Is that we achieve deflationary spiral, which could be scary. Could be scary because that would mean severe economic pullback, severe layoffs, severe unemployment, right? Because if you aren't buying anything because you feel like the price is going to go down, I'm not buying anything because I don't think the price is going to go down, or I think the price is going to go down. That means nobody's buying anything because we all feel like the prices are going to go down. And it's a vicious cycle. It sounds great at the surface, right? Well, let's say if I don't want to buy a house at $1 million, right? You don't want to buy a house at $1 million. Rates are so high that neither of us could afford it anyway. The seller cuts it from $1 million to 800,000. And I'm like, well, did you see that? He just cut it for 800,000. Let's just hold on a little bit longer. Cuts it to 700,000. Did you see he just cut it to 700,000? Cuts it to another 600,000. This $1 million house is now 40% off. Wonder how much lower he's going to go. That is the deflationary spiral. It's where consumers feel like they have all the purchasing power, because they do. But on the other end, on the flip side of it, is nobody's buying anything. That means nobody's going to have jobs because they're not producing anything because nobody's buying anything. Do you see how it all works together, right? So we're not to that point yet. And like I say, part of me is like, this would be great. I would love to see things contract price-wise. But the other half of me says, I can see what could happen. And I don't want to see this running out of control.
So we don't know if there's more selling still to come on the stock market. We just don't know that, do we?
We don't, of course not. If I knew the answer to that, I'd be in Tahiti right now making a lot.
Right. We don't know that, but the trend is down, right? The trend, let me remove all these. The trend is down. So unless the trend reverses, right? Unless the trend reverses, this could go on for a while. Now, granted, we've been in an incredible run of bull markets, right? From around April, it hasn't even slowed down until basically August, and now it's falling off. And then before that, we went from around October all the way to April. So like a 6-month stretch where nothing could get in the way. Could that happen again to the downside? I don't know. But follow the trend. It is an old cliche because it's true. The trend is your friend until it bends. When are you going to watch it bend, right? You don't know when it's going to bend, but you continue to follow your plan if you have one.
Lot of money. But the fact is, what we do know, though, is you've seen over the last month or so a pretty steady decline in commodity prices. They're falling pretty rapidly now, and that is an indication the economy is really slowing down, Stuart. So yes, I think it would be. I think that. And by the way, in the past, I haven't been so supportive of a rate cut. Now I think one is needed, and the only question is, do they go to a quarter point or 50 basis points?
And the only
that was one thing I wanted to also bring up. Give me a second here to Google it up real quick. So Fed rates history. One thing with the Fed is that they move hard and fast, right? Or at least Jerome Powell's Fed. They move hard and they move fast, right? So when rates are going up, they're pretty trendy, I guess you could say, right? Or trendy in the fact that they're consistent, and then they smash them down, right? This is almost like the stock market, right? It goes up in a nice trend, levels out, and then smash down. Weird. Goes up in a nice trend, kind of levels out, and then smash down. And then Jerome Powell comes to town, and he does the same thing, right? Goes up in a trend, smash down during COVID. Goes up. Look how brutally fast this went up to fight inflation, right? Maybe that means it's going to be brutally fast back down. Because that's the thing with this Fed, is that they move hard and fast. They're either all the way on the gas or all the way on the brake, and they don't do either in a slow fashion, right? We haven't seen this since the mid 90s, right? Steady rate movements. Aaron, hey buddy. Aaron and I actually went to college. We were in the same fraternity. Good to see you, bud. We do this every day at 2:15, Aaron. So point is that I think there is a very, very strong case to be made that when the Fed cuts, they're going to cut hard and fast. But that doesn't mean it's going to be the right move, because a lot of people are looking at this now saying this incredibly aggressive Fed rate increase is actually going to backfire, is actually going to be the opposite of what they want. And now with inflation still being a problem, unemployment becoming a problem, and now they're saying deflation's on the horizon. We've not even touched deflation yet.
question then is, how will Wall Street react to an emergency rate cut? I've no idea how they'd react, but it looks like.
Well, look, I guess, yeah.
No, go on.
My reaction to that is, if you're going to do it, do it. Why wait? You know, why wait another 4 weeks to do something everyone knows is coming? But look, I'm not rooting for a recession. Remember, all the economists were wrong in 2023. Remember, Stuart, they're saying a recession is coming. Well, it never came. So I'm not. I want to be.
But hold on a second. Well, you know, remember when everyone said recession was coming and it never came? Are you serious right now? Have you ever been out? Dude, I live in a very affluent part of Texas, right? And I can tell you for a fact that a recession is here. It is here. Where you live, it is here. You see it every day, right? It may not be in the fact that prices are coming down. It's the fact that people have decided to cut back and stop purchasing and completely upended their lifestyles. We're only beginning to see it, right? Credit card balances are at the highest point they've ever been. Credit card delinquencies are starting to reach levels from the great financial crisis in 2008. And yet you're telling me that we have not seen a recession yet? Bro, we are not looking at the same numbers here. We are not looking at the same numbers here. Let's jump into our market analysis. By the way, I know I've spent a lot of time already talking about the markets today, but it's what I do. It's what I love. Welcome to the Outlier Trading Room. This is smart trading made simple. Save time, make money, start winning with less risk. Now that's what I like to call profit hacking. And you can get a copy of the Profit Hacking Playbook over at profithackingplaybook.com, or inside our Discord. You can get it in the VIP Investors Toolkit. So for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with Outlier, and this is my style of trading using Outlier. And the way that I trade, I use it. What I use is called the golden ticket trading strategy. It's the 8 steps to turn profit hacking into pure gold. And make sure you subscribe. Don't forget to subscribe. If you're watching this, you really should have subscribed by now. So the golden ticket trading strategy has 3 key parts to the master key system, right? The SPY being buy or sell, the market breadth, either increasing or decreasing the number of stocks on the bull list or bear list, and then the sector breadth. Once we find a stock, is the sector also increasing or decreasing in breadth? So let's jump into that. So the SPY, we actually still have a buy signal today. Now, I had a conversation with Mahesh, and I was like, Mahesh, what's the deal here? Why do we still have a buy signal? And he said, we just don't have the data point saying that we have a sell come through yet. And I was quite surprised, very quite surprised, which also builds into my thesis of we're not out of the woods with any sort of bounce just yet. What I think is going to happen, like I say, is a bounce, then we'll get the sell signal after the bounce, and then the bottom drops out. Now, I don't know for how long it'll drop out, and I don't know how deep it's going to drop, but that's what I see coming up soon. So the SPY still has a buy signal. Now, the market breadth, the number of stocks on the bull list is how we determine the breadth. How many stocks have a buy signal? And if we look on the chart here, we can see that it peaked on July 19th, and the number of stocks on the bull list has been decreasing ever since that point. So this is bearish. And so even though the SPY signal is bullish, the SPY breadth is bearish. Now, I want those to meet together, right? And then whenever I'm looking at an individual stock, that's when I would add in this part of the master key, but we're not to that point yet, so I don't have to stress on that. But the point is that breadth has been coming down strong. The trend is very clearly down. And until I get a sell signal on the SPY, I'm not ready to go short. But that could happen any day. Honestly, I was the first thing I did when I woke up this morning was see if we got the sell signal. And we didn't yet. But that's okay. That's part of it. Now, in the Discord, we had a couple people ask, how and why did we know to get out? Right. Stock Gambit had asked the question, and then Ben had a follow-up question. And so I wanted to mention, right? He was like, was the S&P breadth over 75%? Was that your sell signal? So let's go to the breadth real quick. The way that I described it, and you can go back to the live streams and see exactly the words that I said, because I've been calling this since July 19th. I said, when you run out of buyers, what's left? Right? When all the buyers are in the market, who's left? It's a very easy answer. It's sellers. That's all that's left. And that's exactly what we saw. We ran out of buyers. We had reached peak buying by July 19th. So all that was left to do was for those buyers to turn into sellers. Okay. That was one way that we got out. The second thing, right? So in my strategy, which we cover every day, which is what I was circling on here, right? If it goes over 75%, it's okay to continue trading, in my opinion, and the way that I trade. I will continue to trade until the breadth crests. Once it crests, peaks, and comes back down, starts coming down, that's when I'm out. And I say halt trading right here, because I don't know for how long, right? I don't know for how long, halt trading. But you can see here in the breadth, it's very cyclical. It moves in waves. So I wasn't surprised whatsoever to see this. Now, the other way that I got out, there were two reasons I got out, not just one, two, right? Is if it closes under the 20, if the SPY, the S&P 500 closes under the 20 period moving average, wait to put on new trades until it closes above the 10 moving average again. What does that mean? Aaron probably has no idea what this means because, this is somewhat of a technical term, Aaron. So on the charts, I only have three trend lines: the 10 period moving average, the 20 period moving average, and the 50 period moving average. All right. So here on this date, July 18th, it was below the 20. And around the close, it recovered most of that. And you can see it closed slightly above the 20, just slightly, ever so slightly. And so on that day, I was like, I'm bailing ship. Go back to July 18th live stream, watch it. I said, I'm getting out of everything. The following day, down, back up, down heavy, back up. It closed above the 10. It closed above the 10 on July 31st. But at that point, the 10 had crossed under the 20. So the trend was down. The breadth was down. There was no reason to be long this market. And then to see this huge gap down today, down 3% on the market, that's a giant move. It doesn't feel scary because we've been in cash, but a giant 3% down move like that is terrifying to most people. In fact, let's go to the S&P map today. Oh my gosh. There's a bloodbath in every direction. Unhideable. Unless you're in CrowdStrike or AMD. That's basically the only two stocks that are even remotely green on the board. There's a couple little bits of green here and there, but that is brutal. Let's look over the last week. Not much different than that over the last week. Some of these are huge, right? Nvidia down 11%, Amazon down 12%. JP Morgan down 7.5%, Apple down 5%, Google down 5%, Meta slightly up. Point is that by having rules, it makes life way easier, right? Because I don't have to think, I don't have to guess, I don't have to make any sort of guesswork whatsoever. Just follow the rules. Now, where did I get some of these rules? I got them from incredible people that are market wizards, like my friend Mark here. Mark and I were texting just the other day. Market wizards, for those of you who don't know, when I went to Ox Ranch down in Uvalde 2 weeks ago, one of the guys who went didn't know who I was, and then once he learned, he's like, "Whoa, this is cool, right?" And I was talking to him about who I learned from and how I learned from the market wizards, and he had never heard of the market wizards, which I am a student of the market. This is my jam. This is my peanut butter and jelly, right? This is what I do all day, every day. It's what I breathe. And for someone to tell me they've never heard of the market wizards, it was akin to, if you like sports, which I don't, which is why this is a perfect analogy. I did not know who was in the Super Bowl at all. My kids had to tell me it was Taylor Swift's boyfriend was in the Super Bowl. That's how little I watch of sports. So I understood where he was coming from, how he had no idea who the market wizards were. But I need you to know this. These are the Hall of Famers of trading, right? And I actually was personally coached by 5 of them, one-on-one directly. And I am beyond blessed, right? And Mark is one. I still consider Mark a good friend of mine. And then Tom Basso, who I mentioned in our Discord, actually liked several of my tweets. Tom was one of my mentors as well. And he's known as Mr. Serenity. So he is, not only is he a market wizard, but he is Mr. Serenity. And his whole catch is enjoy the ride, right? It may be up, it may be down, but you know what? If you position size correctly, it's not going to hurt you. It's going to help you, and it's not going to hurt you that much. And so he's known as Mr. Serenity. And if you watch the way I try and trade with that same sort of mentality, right? There's going to be great days, there's going to be okay days, and there's going to be days that suck. That's just part of the game, right? And the days that suck, of course, we want those to be as few and far between as possible. But you got to take the punches with the market, right? You're not going to win every trade. Michael Jordan made millions of shots. There's probably another basketball player that's just as good as Michael Jordan, but as I said, I don't watch sports. I don't know. Michael Jordan made millions of shots, but he didn't win every one. He didn't win every game. He didn't win every championship. So you got to take it with that mentality of, hey, I'm going to do the best that I can with the data that I have. And you're going to listen and you're going to subscribe. That way you're not missing out anytime we go live, because you basically have, and I don't want to toot my own horn or anything like that, but you've got the product of market wizards at your fingertips every day. The choice is yours to listen or not. The choice is yours to share or not. But I think you would be doing yourself an injustice to not listen to what we do here at Outlier. And certainly an injustice to not share this out to more people, because I could have saved so many people so much money in the last couple of weeks, but what can you do? We can only reach so many people through the YouTube algorithms. Thank you all so much for coming to today's Outlier Trading Room. I'll be right back here tomorrow. Maybe we'll start to go short, but watch for that face ripping rally. I think that's what's coming up next. Have a great day. We'll talk soon.